All right, outside of big cap tech, we're also watching oil names. Much higher energy prices certainly padded the bottom lines of ExxonMobil and Chevron in the first quarter. But the problem is the street wanted more. I guess I'm no surprise on that one, Julie, but both of these companies missing on earnings.
Yeah, and there's a couple things to note here. First of all, very different story from the tech names, which had been falling and falling and falling into their earnings reports. Of course, ExxonMobil and Chevron, those stocks are each up about 40% for the year to date. So we have seen this rise in these stocks going into these earnings reports, along with what we have seen for oil prices. So let's take them one by one. ExxonMobil tripled its share buyback program. And this is something that a lot of people, we've talked about frequently, that a lot of people still own these stocks, not just because they've done well, but also for the payouts that they get. However, Exxon did not raise its dividend, and that's something that some investors were looking for. So it's a $30 billion share buyback authorization. So that's what happened on the one hand. However, if you look at that earnings per share number, to your point, they did miss analyst estimates, and the company said there was a dip in output from oil and natural gas wells, partly because of weather, partly because of other factors. The company, on the plus side, did say it is taking a smaller than estimated write-down tied to its holdings and its offloading of assets in Russia. So that's one thing that was potentially positive. When it comes to Chevron, just quickly or to run through that, the company missed. There, it was refining margins that were a problem, which is interesting because you have this whole political argument about, oh, these companies are price gouging. Well, if they were price gouging, Chevron did not benefit on the refining side. In other words, turning oil into gasoline and other refined products was less profitable than expected for Chevron. So that's something important to mention as well here, Soz.
Yeah, it was an interesting quarter for both of these companies because I would argue, Julie, Chevron, at least fundamentally, numbers-wise, they look better than Exxon. But then you have Exxon come out here with a new $30 billion stock buyback plan, another big company announcing a share repurchase program. So lots for investors there to chew on. And then, of course, the other name to watch in the oil space headed into the week, and that's Occidental Petroleum. Warren Buffett tomorrow is going to hop to the mic. I'm sure he will receive multiple questions about his increasing exposure to Occidental Petroleum. So that is a name to watch into the close. And lastly, too, real quick before we do our little stat of the day, I got a tweet from a loyal viewer. I like Bebop, asking me if I did shave today. I look different. Yes, I did, in fact, shave today, but I appreciate your loyal viewership.
Saz, one more thing I wanted to mention besides your facial hair is that when we look at the backdrop with oil prices here, oil could be having its fifth straight monthly gain. So that's something that even if you've got some short-term sort of struggles for these oil companies, that over the longer term will likely end up benefiting them. So you see here the gain that we have seen over the past 6 months or so in that 5-month run that we've had in these oil prices. It's pretty remarkable and obviously not fantastic news for people who are looking for some relief on the inflation front.